right, welcome to another podcast with Daily Finance. And today you're going to talk about stock price. And more specifically, what is it that makes up a stock price and what is it that makes the stock price move? This is one of the things that I think a lot of people should know more about. And basically, the stock price is just a function of supply and demand. You know, that's it. Thank you for the video. Supply and demand, game over. Now, we got to figure out what is it that drives supply and demand. That's what's interesting, because supply and demand is everything, right? But we got to go one step down and look, okay, what drives it, right? And in finance, we're taught to evaluate companies, because sometimes people want to buy an entire company, so we need to figure out a way to estimate that value. And I won't go into detail about it here, but it's basically the expected future profit of a company that really moves the stock price. We don't really care about the other thing, but that's for another video. So that's why when we see the news and there's changes to politics, there's a conflict somewhere, there's changes in regulation, maybe changes in competition, we care about that because that might have an impact on the ability for our company or for a specific company to earn profit in the future. So we need to pay attention to that. But what a lot of people do wrong is that they see the news that happened today or yesterday and they think, oh, this is bad news, I want to sell my stock. It's already too late. By the time you read it, it's too late. That's the point. It has already happened. The stock price, theoretically, and because of the internet today, in practice, pretty much as well, people have studied this, it's too late. The movement has already happened. And even if the stock price keeps moving down, people put the orders to buy or sell a stock into place. And they are executed kind of one at a time. You know, it moves really fast, but that's how it works. So even if you click on the sell button, you might be number 50,000 in a queue because people all across the world can buy and sell stocks. So you're not going to get the price when you push enter or confirm on your purchase or your sale of a stock. And that's what a lot of people do wrong. But they love talking about the news. That's cool. That's exciting. That's something that makes you sound smart because you're on the ball and you kind of know what's going on. And I think a lot of people genuinely do invest that way. It sounds like it. But that is the wrong way to do it. It's being reactive instead of proactive. And that's one of those golden Zen rules of finance. You need to be proactive. And the reason you kind of have to think like this is because the vast majority of people that trade in stocks are not normal people. It's the large banks. It's national investment funds. They have the enormous majority of stocks out there. The rich get richer. So they act really, really fast. Sometimes they have not just one team, they have several teams that analyze the market, that are on a ball, sometimes team tag around the clock, around the globe to follow the stock markets whenever they're open. So it's impossible for you as a singular person to kind of outbeat them. They can make mistakes, so it's not impossible, but the odds are very much not in your favor. And I think that's an important thing, like a sobering thing. Because everybody thinks that they're the best. And listen, theoretically, everybody can kind of make money in the stock market. Now, some companies will go down and some will go up. But, you know, on average, the stock market globally, I want to say, tend to go up. And, you know, maybe I'm talking myself up here, but personally, not that it matters, but I like a more of a passive long-term strategy. You know, I'm lucky I'm younger, but to be honest with you, doing so much of reading the news and trading all the time. Now, I like to read the news, but I don't want to be on the ball 24/7. And the probabilities of you actually getting a lot of extra value out of that is slim to none. In a lot of cases, they tend to actually lose value. Because what a lot of people do is that they make money in the short term and they show that off. But you never hear about the bad periods. Now, I value consistency. I think that's good when it comes to my money. Because, you know, it's my hard-earned money. I don't want to just throw it away and gamble, man. I have enough money to put them into stocks, but I want to make money. having them in the stock market. That's at least my mentality. You know, I have some things I want to achieve and do in life, and I don't want to risk that, man. I would rather want to achieve that at a younger age. That's me. That's my personal goals. But I want to just bring that out there, that be careful if you are fairly new to stocks or tend to invest in stocks just reading the news. Now, you can be successful doing this. I'm not going to say that you can't. But theoretically speaking, it's not the safest way of doing it. You are actually playing the reactive game. You're joining the party after everybody has already kind of left. The party's over. It's typically a strategy where you're actually buying the highs and selling the lows, which is not what you want to do. You want to sell stuff when it's worth the most, and you want to buy it when it's at a bottom, because that's a good deal. And I know people probably don't want to hear a sobering speech about stocks and slow and steady as she goes, but I just want to throw it out there because I feel like it's a thing that I see so often, even by people that have master's degrees in finance. Anyways, I hope someone found this interesting. Please leave your likes and comments if you want. And let me know if there's anything else you want me to talk about. If not, I'll just keep posting videos like this where I talk about things that I've learned through investing. All right? Take care out there. Peace.
You say you don't know, you won't know until you begin. I can't just see me standing here, I got my back against the wrecking machine. I ain't the worst that you've seen. I can't you see what I mean? Ow, might as well jump, jump. Might as well jump. Jump, jump. Go ahead and jump. I can't you see me standing here? I got my back against the wrecking machine. I ain't the worst that you've seen. I can't you see what I mean? Might as well jump, jump. Might as well jump. Go ahead and jump, jump. Go ahead and jump.